Welcome to the Smart Venture Podcast Sponsor Spotlight. We're taking a moment to highlight the companies making our show possible. Today, we're thrilled to feature Alumni Ventures. Alumni Ventures offers individual investors access to venture investing through its diversified, professional-grade venture portfolios. We're excited to share more about what they do and how they're making a difference. So sit back, relax, and let's dive into Alumni Ventures Sponsor Spotlight. Hi, Mike. Thank you so much for chatting with me today.
Thank you for inviting me, Grace. Look forward to it.
So to start off the show, I would love for the audience to get to know you a little bit more. So we were just talking about like you were working for a company that eventually sold to Mattel, and then like maybe we could start from there. Your journey is definitely extremely interesting before your venture career. So I would love to start from how you started and then how you got into starting Alumni Venture.
I'll take you way back. I grew up in the Midwest. I grew up in Madison, Wisconsin, a great town. Came east to go to college. So I went to school in New Hampshire, Dartmouth College, where I played basketball and enjoyed being a college student. Probably my college claim to fame was I got to cover Michael Jordan, actually, they beat us by 48 points, but that was a good experience. And then my first job after college was with a venture capital firm. I didn't know much about it, but it was a great firm called TA Associates. And I worked there for 4 years before going back to business school at HBS. And really my entire career, 30 years now, has been investing and being an entrepreneur. So this whole kind of ecosystem of building companies has really been the story of what I've been interested in, and really lucky to get into it early. And then 10 years ago, I started Alumni Ventures, really based around something that I really felt strongly about, which is that venture capital is a really important asset class, that it really needs to be part of people's portfolios. But it is really, really hard for individuals to assemble a portfolio that is large enough, diversified, and frankly has access to really good deals in it. So, that's what we've been trying to do here at Alumni Ventures with some success. So, I don't know. That's the Mike Collins career in 3 minutes.
Yeah, I feel like it's really cool and impressive that Alumni Venture is like $1 billion fund that's backed by a lot of people. So when I first encountered the concept, I just thought it's extremely crazy to raise from individual investor. Also you started different venture chapter in different school. I would love to learn about how did you start it at the beginning when you first founded your venture fund in your alumni group, and then quickly scaled it up into so many different schools?
Like a lot of entrepreneurs, everybody thought I was crazy. Conventional wisdom of venture capital is you raise money from endowments and family offices and pension funds. Mm-hmm. And why would you bother with an individual investor who might write a check for $50,000 or $100,000? Why would you bother? It's a lot of work. And instead of a bug, I kind of viewed that as a feature and said, if we pool money together and create a real strong network. And as a Dartmouth alum, Dartmouth people are really gung-ho about Dartmouth. Mm-hmm. And, they're very represented in the venture industry, very entrepreneurial. And so I started with my alma mater and said, if I get hundreds of Dartmouth alums together, pool money, we can get access to really good deals. And, we started with that vision and just started with Dartmouth, and then figured out how do you scale and grow. And then people said, oh, it's just Dartmouth. Dartmouth people are crazy. And so then we went to Harvard, and then we went to Yale, and now we're at a couple of dozen alumni funds. We've raised $1.3 billion. We're, one of the more active venture firms in the world. And we have a niche. We only co-invest. We invest alongside really top venture capital firms, names you'd recognize. But we don't sit on the board. We don't price deals, but we try to be really helpful as a co-investor. Mm-hmm. And the way we're helpful is actually that thing that everybody thought we were crazy to do, which is, to assemble this community of what is now 10,000 investors. And they can be really helpful to a portfolio company who might be looking to recruit, might be looking for expertise, might be looking to have an introduction to somebody. So yeah, it was a good idea and a lot of work and a lot of time to get where we are today. But I also think we're still just getting going. We have so much more we want to do as a company.
Totally. I think like one of the things I'm always curious about, like raising funding is extremely hard for any entrepreneurs. And then, Alumni Venture never really raised funding, but like there is like a team of people that are basically client facing to sell like this financial product to the customers. So I'm out of curiosity on like, raising over $1 billion, like you mentioned, like $1.3 billion, that's like a really huge number. How do you guys like go about like, educating the market when this is like a really new thing? And I don't really think like any investment firm that like focusing on individual investors can get to this big, or like us even have like, do you guys even have competitors? I'm just curious, like how do you really get to, over $1 billion? I think that's just really impressive.
I mean, you get to where we are, really one investor at a time. So it really is about having a conversation. We speak to all of our clients, basically all of our customers. And we really try to explain what we do and how we do it. We have very strong beliefs about the asset class. We think it's really important that people diversify. So within a portfolio, venture capital really should be only a small slice. It's illiquid, it's long-term. So you need to allocate the appropriate amount. For most people, that's probably not zero, but it's also probably not 50%, right? It really varies on your circumstances and your risk profile and your age and all that good stuff. But just as important to kind of the right allocation is you want to be sure that your venture portfolio is a portfolio, which means it's about, you don't want to make two investments. You want to have a portfolio in venture capital in particular that's, 50 to 100 investments. This is what they call a power law business. It's a hits business where out of 10 investments, you might have 5 that don't make it and 3 that do okay and 2 that do really well. So really having a large diversified portfolio, I think, is really important. And then just kind of sticking with it over time. So investing year after year is really, these are fundamentals that are true about investing in general, really, but especially true within venture capital. So, we've really tried to emphasize having conversations, being a very kind of consultative venture partner, if you will, to our clients. A lot of our clients are successful, they're smart, they're well educated, but they just don't have a lot of experience or exposure all the time to this particular asset class. So we explain how we do it. The natural questions are, things like, well, how do you get into the very best deals, right? That individuals really don't have a shot to get access to. And we do it because we have really strong relationships with entrepreneurs. We add value to them. We have a good reputation. And we really try to play nice with other venture capital firms because we don't lead. If we make an early investment in a really cool company, we can introduce that company to a lead investor. That's a service to the portfolio companies, and the venture firms really appreciate it. So we have our niche in the venture community. We try to do a really good job for the entrepreneur and our customer. And we try to democratize it a bit, right? For all of our investors have to be accredited. That's the law. But we try to make the minimums, pretty small. So it's, we're trying to get into a big venture fund might be millions of dollars. Our investment minimum is like 25 grand. So 25 grand for a portfolio over 20 or 30 really good venture deals is pretty attractive to a lot of people.
Totally. So like speaking of building your venture capital portfolio, like I think you already answered one of the audience question about the minimum for investing. I'm curious in terms of like building a portfolio like this, how do you guys select deals? And Alumni Ventures offers different kind of funds like the total assets fund, alumni funds, and focus funds. I would love for the audience to get to know it a little bit more. And by the way, I'm super thankful that like Alumni Venture is a supporter of Smart Venture podcast. And I definitely want my audience to get to learn about the product, also as well as like Mike's story on like how you kind of like build these successful portfolios.
Yeah, so let me answer your first question, which is how do we select deals? There's some really important fundamentals. One is you're looking for a really important problem to be solved, right? I mean, what is the market opportunity? How big of it? What's the pain point? How is the company trying to solve the problem? You're really looking at the quality of the team, their capabilities. Have they done this before? Do they have specific insight into the market? We look a lot as a co-investor at like, who's the lead investor? Who's leading the round of financing? Is this a top tier firm? Is this a venture capitalist who has domain expertise to pick winners in this space? We're looking at the business model, an attractive business. Are the economics good? Again, it can vary by, whether you're looking at a biotech company or a SaaS business, but there's rules of thumb of what you're looking for as far as traction, product market fit. You're really betting on the potential of the business. Valuation always comes into play. You definitely are not using that as the main driver, but you have to take into consideration that you're buying an asset and is it fairly priced? We do due diligence. We have investment committees. We like to be sure that we balance individual decision makers having conviction about a deal with checks and balances of having a lot of experienced eyes looking on deals to be sure that we're, asking the right questions and serving the best interest of our clients. So it's a pretty rigorous process. We have 55 investing professionals that's their job, is get up every day and get access to great venture deals and add them to our customers' portfolios.
I'm curious, when you were selecting, let's say like if you are an audience that like you're interested in investing in venture capital portfolios, how would you pick which fund to invest in, and how would you kind of like make a diversified portfolio?
So we have a product line, and really the base of it, the foundation of it, should be what I would call a diversified fund. Mm-hmm. So for us, those are alumni funds. We have a product called our Total Access Fund, which is basically a little piece of every deal we do. That is really a good foundation of a venture capital portfolio, is a large, general diversified portfolio. The equivalent is like an ETF of the S&P, if we were talking public companies, right? So that's where you want to start. And then on top of that, as you get more comfortable and particular interests, you layer on top of that what we call focus funds. And those might have a theme. So we have focus funds related to AI or health tech or seed or climate tech. Those are portfolios that are organized around typically a specific technology, right? If you will. So that would be kind of the next layer that you might choose to go to. And again, the equivalent of that with public stocks would be like you're picking a mutual fund, which does, commodities or something. And then within venture capital, kind of the final thing is to pick individual venture deals to do. And we only allow our customers that have the diversified portfolio to do the individual selection. People do enjoy doing it because we share our due diligence, we have a data room. It's a fun thing to do as a group or as a family to kind of look at a deal and decide whether you're going to invest or not. But we view that very much as kind of the top of the thing. And again, I'm using the public market analogy because people are more familiar with it. It's like ETFs, mutual funds, and then individual stocks. Same, it's different with private companies, but AV offers kind of the equivalent within venture capital. So, but you should really, I think, would encourage people to think about it the same way.
How would you look at from the return perspective? We all know from a venture capital firms, they typically have returns after 5 to 10 years. Let's say I put in $25K into Alumni's fund. When should I be able to get the money
Yeah.
and like some interest.
Yeah, no, Grace, it's really an important thing to understand about the difference between something like venture capital and private stocks. If you go and buy shares in Apple Computer and you, for whatever reason, you want to sell it, you can just go onto your account and sell it pretty much instantaneously. In venture capital, you're making an investment in a private company. A lot of times it's really early stage. And so you don't have the ability to sell because it's with that company. So your money is illiquid, it's locked up until that company is sold or goes public. And so that time period can be anywhere from 3 to 5 years on the short end to sometimes really successful companies, it can be more 7 to 10 years. So our funds are set up as 10-year funds. So, the way to think about it is you put in money kind of at the beginning, and then you have a portfolio of 25 companies, and some make it, some don't, over a 10-year period that those things happen. So it's very important to understand that, before you go into an asset class like this, and this is true with other alternative investments, that the convenience of just being able to say, hey, I changed my mind, I'm going to sell this stock, doesn't exist in our world. And so you really need to take that into consideration when you develop a portfolio. This should not be the money you need to pay mortgage or rent with or something like that. This is something that is a long-term investment that you're looking to build over time. And because of that, venture capital historically tends to be a pretty good investment asset class. Now, there are good vintages, bad vintages. I've been at this a long time. There are boom cycles, there are bust cycles, but overall it has been very good asset class for people that kind of have the patience and invest in for the long term, do really well with. And I think one of the things to note are the wealthiest, most successful college endowments and pension funds and billionaires. They tend to have a pretty healthy allocation into venture capital. The Mark Cubans of the world, they have a big slice of their investing portfolio in this asset class because it does well, and they can build a big portfolio, but they also have the resources to not need the money at a moment's notice. So again, that's part of what we try to do with our clients, is to be sure there's a really strong educational component about, this is what this asset class is like, this is how it works, this is what you should be prepared for, this is our strategy and why we think it makes sense. But you have to kind of make that individual decision yourself with your family, your financial advisor, what have you.
When it comes to selecting the deals that like performs the best, we all know like the Uber of the world, like when you invest at the beginning for $5,000, you can get 24 million after 10 years. But it's really hard to get into deals like this. Like, so
Yeah.
how does Alumni Venture position yourself into, getting into these competitive deals?
Well, first of all, if you knew it was going to be Uber or Airbnb, or right now you're talking about OpenAI and ChatGPT, if you knew when it was 3 people that it was going to be a $10 billion company, it's easy, right? Kind of thing. So every time we make an investment, we think it's going to be a great investment. Sometimes they do turn out to be that great, and sometimes they aren't. So it's only super clear about these things in hindsight. A lot of these, everybody that starts a business from, Zuckerberg to Steve Jobs, they're kind of thought of as crazy when they're starting. So it's only obvious kind of looking backwards. But how do you sell yourself in to say, Grace, you had a really cool startup and we wanted to invest in it? We'd be just explaining how we try to be helpful for you. And what we generally say is, we're not your lead. We're not going to be on your board. We're not going to set the price. That's not the role. And that's a really important role for you to select carefully who your lead investor is going to be. But we're going to try to be a really supportive and helpful co-investor. So, it's a little bit like the difference between being a parent and being a favorite uncle, right? Your favorite uncle kind of leaves you alone, but if you need help, they're there to be as helpful as they can be, right? So, we're kind of the favorite aunt, favorite uncle in the venture industry. We try to be super supportive. We try to be helpful. Most entrepreneurs, need help in, kind of 3 or 4 key areas, right? they need money. So introductions to capital sources, we can be super helpful. They need help getting customers. So again, we try to work really hard to make strong introductions to people that can open doors for them. They need teammates, they need talent, they need to recruit people to help them build their team out. And then there's just there's some crisis of the week that they're dealing with, right? That's the nature of entrepreneurship, right? So we try to put them in touch with other entrepreneurs who maybe have experienced those things before themselves. So we try to be, we want to be an investor in your company. We're typically taking 10, 15% of a round. So if it's a $5 million round of financing, we might write a $500,000, $750,000 check. And then we try to kind of disproportionately help you add value to your business over the long run. And so again, we've been at this a long time. We're set up to kind of be with you through that whole journey.
So when it comes to building the company, a lot of our listeners are entrepreneurs. They probably kind of resonate a lot with how you started the firm. And I'm curious, I feel like to scale up the firm, Alumni Ventures, started with you and your alumni network. Curious, at the early days, how did you get the first group of investors to join? And then what were the challenges that you kind of faced back in time when you were working on this crazy venture?
I mean, in the early days, there were, kind of three of us sitting around a table, right? Like a lot of entrepreneurs, we were in a little building, and, we just started networking, and we were networking to see if we can pool money together into our very first fund. First alumni fund was Green D Ventures 1, which was, our very first Dartmouth fund. And I personally probably talked to 300-400 alums to get, I think maybe we had 40 investors in our very first fund. And our first fund was maybe, I think it was $1 million maybe. As a venture fund is tiny, and now we kind of raise that in an afternoon. So we've come a long way, but yeah, I mean, big ideas start small, and it's a lot of salesmanship. One of the key attributes of entrepreneurs is you have to be able to tell your story, and you have to be credible and passionate about it. And it's not just selling investors, but it's, selling people who want to come work with you on this crazy idea when there's no proof, right? Kind of thing. So you have to really believe in it. I was not in this venture, I was not a 25-year-old entrepreneur. I was a 50-year-old entrepreneur. So, I kind of knew what I was talking about. And it was credible. I had domain expertise. But even then, starting businesses is really hard and takes a long time. And this kind of myth of it's just a good idea. I mean, the idea is 10% of it. 90% of it is just trying stuff. You try 10 things and 5 of them work, and you do more of those, and then you try 10 more things. And it's very much it's much more like biology and experimentation and trial and error than it is, lightning strikes, I have this brilliant idea, and it's all downhill from there. That's kind of the myth of American entrepreneurship, but it's really 10 years of overnight success kind of thing, right?
Totally. I'm curious, what was the first deal that you kind of started when you started the first fund?
Our first deal in Green D1, boy, I probably can't remember the very, very first deal we did. I remember there's 2 companies in our first fund that I do remember. There's a company called Sleeper, which is for people that play fantasy football. Sleeper is it's one of the leading fantasy football apps out there. And then there's another deal in that portfolio called Groups, which runs clinics for people with opiate addictions and has unfortunately dealt with a huge problem in our society. And we invested in both companies really early. Sleeper, I think, became an Andreessen deal. Don't quote me on that, but I think that's a A16Z deal. And Groups is a Bessemer deal, who came in, I think, and led their A. So those are 2 from Green D1 that pop into my mind. Very different, obviously. Fantasy football to opiate addiction clinics.
When it comes to like, this is a touch on like one of the person's question is like, what percentage of the portfolio is positioned for blockchain and Web3 technology? So I
Yeah.
know that Alumni has a focused fund, which is like early stage and international
Yeah.
and like tech every quarter. So like, I would love for you to share with us, like, because you mentioned the two deals were very different, like fantasy
Yeah.
football and like other things. And like curious, like how do you select these diverse group of portfolio?
So it's a good question. So there's a couple of things. One, because we co-invest with like top tier VC firms, we're kind of investing what the VC industry is investing in. So if you look at what they invested in 2018 versus 2023, that mix changes, right? A little bit. So we're kind of doing what the venture industry is doing. And so this year, AI is a huge area of investment, right? The technology has kind of reached critical mass. It's the tipping point. There's a lot of stuff going on there. There's a lot of stuff going on in climate tech. There's a lot going on in, software is always a huge investment area. And that can be applied to vertical markets, infrastructure. SaaS business is a really good business model. So a big part of our portfolio is in that. There's always really interesting stuff going on in life sciences as well. So there's, real breakthroughs that are kind of, sometimes they're applying software or AI to health issues. That's a really exciting space right now. There's always innovation going on in consumer stuff. So if you look at some of our focus funds that we have planned for the rest of the year, you're looking at seed, you're looking at AI. We think there's really important things going on in gaming. We think that, there's really exciting things going on in gaming. Sports tech is actually a really interesting area for us. Again, life sciences. Again, I think we're going to see a revolution over the next decade in kind of using technology to help with disease. I think we can all be really optimistic about the medium-term potential to manage cancer in different ways and some of these things. There's really been a revolution in kind of some of the obesity drugs that are starting to come online. We're starting to see the first generation of those. And obviously obesity is a huge problem in the United States, leads to a lot of secondary health issues. Grace, when I started out in the industry, there was innovation. When I went to business school, people wanted to work on Wall Street. People wanted to work at consulting firms, big companies. Culturally, it's changed. Now people that go to Stanford Business School want to start businesses, right? And they want to have impact and they want to change the world. And they've seen where companies for good or bad change the world, right? And so just almost every aspect of life now has really smart, talented people trying to innovate. And I think that's a really important thing. And it's a sign, it's something to be optimistic about. So much of the world is about everything that's wrong. And the world does have problems. And some of those problems have been exacerbated by technology. Unless you think we're going back to kind of hunter-gatherer, the only solution is, use technology and innovation to help solve those problems, right? So the automobile and industrialization created a carbon problem in our atmosphere for sure. How can we use technology to solve that problem? Right? Again, that's how I'm wired. Yeah, as you can tell, I get really excited about talking about new companies and innovators and building great new platforms. So yeah, those are some of the areas that, working on.
As an investor, like as an individual investor, if I come to invest with Alumni Venture, can I pick which focus to invest in? Let's say I'm just interested in AI and then assuming there's a fund for that. Also, like, let's say Alumni Venture is started with alumni, right? Let's say if I want to invest in a particular alumni group, like if I didn't go to that school, can I invest in it?
Yeah, that's a good question. Yes. I mean, it's like, if you wanted to invest in a Harvard fund, we absolutely let you do that. Most of the people who invest in the Harvard fund are Harvard alums, but we don't say you have to go to the school to invest in the fund. That's kind of against our mission of democratization. And we do let you pick the funds you want to go into. So if you want to just do our AI fund, that's available. We put a lot of control over the particular portfolio to the customer. The only rule we have is we don't let people come in and just do individual deals. You have to be in a fund to be offered individual deals. So if again, it's maybe a little paternalistic, but we don't think it's the right thing to do to just not have a venture portfolio, but just have, I'm going to put 10 grand into this one venture deal and hope for the best. I mean, that's not the best way to go.
When it comes to like, picking these deals, you guys have over 150 employees and they're working on selecting deals. How is it run? Because of like a lot of the customer prefer some transparency. Like Alumni Venture also have a team of people raising funding. Can you elaborate more on like how is it operated?
So like our org chart, as you mentioned, rough numbers, we're 150 people. A third of those people are venture capitalists organized around our particular teams. And then we have about 25 people in finance. We have about 25 people in engineering, and then we have marketing, communications, the executive team, human resources, normal back office stuff. So about 2/3 of our stuff is back office stuff. And that is just to be sure that administratively, there is a lot of volume here with this many deals that we do. So we do 300-400 deals a year. We bring in a couple of thousand new clients every year. We have investor reports that we have to get online to our customers' investor portal. So it's operationally intensive to run a retail venture capital firm. And so in order to service our clients, we had to build a fairly large team in order to execute it. And now going forward, it's the next phase of our business. We want to continue to grow 20-25% year over year. We have 10,000 clients. That sounds like a lot, but there's millions of Americans, we think, that should have this asset class and don't. So we just want to kind of keep building and growing. And we think we can do that, without growing our staff much bigger. Now that we've built the factory and created technology and systems to do this stuff, we're looking to double or triple over the next 3 to 5 years in just the amount of people we serve.
When it comes to like being a customer there, like, I know that there's supports for people to meet each other. What kind of benefit can I have as an investor into the fund?
It's really up to the customer, right? So you can just fire and forget it, right? Like, I want this asset class. That's all you have to do. You can check your reports, you can be very passive if you want to be. A lot of people find this interesting and they want to learn. And they find what our portfolio companies are doing to be very interesting and they want to be helpful. So, we try to do educational things. So we'll run a webinar where we take a deal and we analyze how we analyzed it as venture capitalists. So people can kind of like see how venture capitalists think about it and debate it and ask questions. We also have, in the major cities, we'll have meetups where, we will invite our investors to come and meet some of our entrepreneurs and hear their pitches about the work they're doing and what they're working on. So it's one thing about a venture capital is it's interesting. And a lot of our customers are really curious people. And so they're doing it not just for a financial checkbox, but they're doing it because they want to know what's going on and they want to be relevant professionally. So, understanding what's going on in AI is affecting and going to affect a lot of jobs. So I want to know what's going on the edge of artificial intelligence and machine learning and quantum computing. So we try to do that kind of education, social. It's just fun to do these meetups, cocktail parties where you're hearing from entrepreneurs, we think. So we're busy. But and we'd love to do more of it, but we do try to do a bunch of that stuff.
When it comes to competing with, like, let's say fund managers on AngelList, there's a lot of like syndication funds going on, and then there's like SPVs, and then like there's other financial products in the venture ecosystem. How do you feel like Alumni Venture differentiated from these different other kind of like assets?
Yeah, I mean, I think obviously there's different forms of competition. One form of competition is just frankly non-consumption, which is of the people who could have this asset class, most don't, right? I think if you were looking at the pool of accredited investors in the United States, I'd estimate 95 to 99% of them don't have what I would call a venture portfolio. They either have none or they've done a couple of random deals with golf buddies or classmates, but that's not a venture portfolio. So I would say our competition number one is non-consumption. I think if you really want to invest a lot of time and develop your own portfolio, I think it's really hard. I think you can go on AngelList and make some investments that way. I think you can go to kind of local angel groups, but I think unless you're in the business, it's very hard to know what to invest in. And I think there's a adverse selection problem, meaning the coolest deals and the strongest management teams aren't going to the Holiday Inn on Route 95 to raise money, right? They're getting backed by Sequoia and Benchmark and USV and Lightspeed and those people. And so, like I said, if you're going to play, pick the right allocation, have the right diversification in your portfolio, and be very aware of, are you being honest about your ability to get into top tier venture capital deals at scale, right? So I'll just leave it at that when it comes to my point of view on this.
When you first started, like you mentioned, like your first deal was with like A16Z or Bessemer. How do you enter these deals at the beginning? Because of like the skill comes later, right? Like nowadays, you're very competitive, but like at the beginning, how do you kind of position yourself?
So at the beginning, I was really relying on a couple of things. One, I had been in the ecosystem for a long time already. So this was not me starting the business at 22 right out of college, right? I had developed connections, networks, some pattern recognition beforehand. That isn't always possible in the companies we back. That's fairly rare, actually. The other thing I relied on was my natural network, and people that I had met through Dartmouth, Harvard Business School, where I'd worked professionally. I used everything at my disposal to kind of make connections, just try to find product market fit at a very small scale, right? And then build on that day by day, getting just a little bit bigger with incremental improvement. So I think network, when you're just getting started, having a team, networking, using friends, family, school connections, anything you can do to help you get in. And then frankly, there's just a certain amount of grit. I mentioned to you, early in my career, I worked at a consumer company, a doll company called Pleasant Company, which has the American Girl collection, got bought by Mattel. But I got a job there because I basically walked in the door and said, I'll do anything. And I had been to Harvard Business School and, fancy resume. And I literally walked in the front door and said, I saw that you're hiring for the loading dock and I want to apply. Longer story, but one thing led to another. I ended up not working on the loading dock. I actually got hired by Pleasant to, do a special project for her, and one thing led to another. But just putting yourself out there is not to be underestimated. The things that really come to you in life are usually taking a risk, putting yourself out there, failing, picking yourself up, trying again.
Yeah, love the story. And I'm so glad you don't work for the loading dock anymore. I'm curious,
I didn't think I was going to be on the loading dock for long. So that's where I don't suffer from a small ego. So I didn't think I was willing to do it, but I didn't think I was going to be there long.
That's super inspiring. And I'm curious, like after you started your first fund, and then like how do you scale it up to so many different alumni groups and have different chapters?
So we had success with the Green D Fund. And so the team basically sat down and said, what do we do next, right? And, I remember we created basically a spreadsheet, and we created a set of criteria, and we scored all of these schools, and we scored it based on what is the entrepreneurial ecosystem like, What is the size of the alumni group? How wealthy is the alumni group? Is there a geographic fit for where we are today? Does it bolt on nicely? And again, we scored every school. And it's fairly obvious that like, oh, if this works at Dartmouth, maybe this will work at Harvard. And if it works at Dartmouth and Harvard, now it probably works at a lot of places. So then we went from, the first 3 or 4 schools to, we really wanted to be aggressive and land grab because we felt that there were flywheels and there was scale and network effects. So, kind of years 3 through 7, we worked to get to all of the top entrepreneurial schools as quickly as we could. So, we got to Stanford, we got to MIT, we got to Berkeley, we got to Northwestern, Penn. It was very important for us to really kind of put our stake in the ground at all of those big entrepreneurial centers. And we feel really good that we have really good communities at really the 20 most important schools when it comes to entrepreneurship and innovation. And not because great companies aren't started by 2 founders who met at Syracuse, right? If they are successful at some point, there's going to be somebody from one of our alumni groups on their board or on their executive team. It's just the way it works. So we feel that we have kind of an alumni connection now that's, 1 degree of separation at every good company.
I'm curious, like when after you guys launched the fund into different universities, what are some interesting findings that you feel like were not really obvious? And, you can't launch 24 school at once, right? Like how do you quickly launch all these different funds, and then what kind of benchmark you have seen before you launch to the next?
So, I think the key is, again, these things sound trite, but the key to it is really hire good people to run the alumni fund at that school, right? So it's like our team that works at the University of Penn, they know what the Penn ecosystem is like, and they know what the successful companies that have come out of Penn are and who the venture capitalists with the Penn connection. So you don't have to make all the decisions yourself. You're trusting the people you hired to make really good decisions. I think if there have been any surprises, I would just say generally we are really embraced by the entrepreneurial centers within the colleges and universities. So again, this has changed in the last 30 years, but a lot of colleges and universities now have an entrepreneurial center, and because this is what schools are interested in. So they really have built up really strong programs to expose their undergraduates to venture capital and entrepreneurship. So I would say that the speed at which that ecosystem has grown has been remarkable. I would also tell you another thing that I've been really impressed with is the number of undergraduates that are doing kind of meaningful work while they're still in school has really changed. People have side hustles, they start businesses in college. Some of them are small, or some of them just don't go anywhere, but they're really committed to learning, right? Trying stuff. And I think, again, since I was an undergraduate, that has really changed. The ability to not view, hey, we tried something, it didn't work out, I'm a failure. That whole kind of the California culture of you start a business, you try really hard, it doesn't work out, you maybe take a job for a year or 2 and then you try it again. So it's I think that's permeated from kind of the Bay Area to kind of society in general. Just the willingness to kind of want to be part of building something, taking risks. And let's be frank, students who go to these schools, they have options, right? And it's I joined a startup, it didn't work out. Your life is not over. You can just go get a job. You can go join another company. Executives, leaders, companies I know do not view that as a negative, and they view it as, oh, they tried something, they had some guts, they probably learned a lot more than if they had been sitting at a cubicle in a big company. I'd rather employ somebody who is learning at that super fast rate than somebody who's taken kind of the safe job oh, and I'll be an entrepreneur later.
So I'm curious, like right now, as you mentioned, like a lot of universities, like entrepreneurial ecosystem is getting really popular. And like I'm sure there's a lot of other alumni that are running like alumni associated, like smaller funds. Like I've heard a lot from like some top schools that like people are running alumni related funds. How would you make alumni venture more competitive compared to some of the funds
Yeah.
that are like started recently?
Yeah, I mean, again, I think we're by far the largest
Mhm.
and have the most scale, right?
Mhm.
So at almost every school that we have an alumni group with, that there's a fund. And our view is like the more the better, right?
Mhm.
You know, and yeah, I mean, if there's a different fund at a school, you know, oftentimes we'll work on deals together. You know, again, we're a co-investor. We don't have sharp elbows. We try to work with people, not compete with them. It is an advantage we have by being a family of a couple of dozen alumni funds. We're at a competitive advantage versus a fund that is at just one school. So if you're an alum that went to Dartmouth and your choice was to go into the Dartmouth fund or another fund that was set up to fund Dartmouth people, you know, our point is when we create a portfolio for you, a Dartmouth alumni portfolio, it's not just that team that sources your portfolio. Your portfolio is going to also include some deals that were sourced by our MIT team and our Stanford team and our Penn team. So you're just going to get a better portfolio by having this network of alumni funds is more powerful than any individual alumni fund could ever be on their own. And it's one of the reasons we wanted to kind of land grab and get to scale is the quality of deals. There's network effects in this business. Think of it the other way is if you're the entrepreneur, Grace, and you can take $1 million from Alumni Ventures and have the support of 10,000 of our clients, and our network is 600,000 strong versus this other group who's 4 people and their group is much smaller. The power of our network to a portfolio company is just far greater. We just have the scale now to add more value being big than value added being small.
I definitely feel like the diversified proposition is like really attractive. So we're at the end of the chat. So like I want to end with like, you know, what's the future of Alumni Ventures?
We want to continue to grow our communities. We want to back entrepreneurs. So it's more of the same, Grace, in the nutshell. I think 10 years from now, we want to be, you know, one of the larger venture capital firms on the planet. We want to grow internationally. We want to just help more teams create exciting new businesses that solve problems and impact the world. So yeah, we're really excited about the next decade.
Awesome. Well, thank you so much, Mike, for chatting with us today. And if you want to learn more about Alumni Ventures, I have a link for you, av.vc/Grace, and I will put it in the chat. And then Luke has also shared the av.vc/investors. You can use either link. Feel free to connect. And thank you so much for coming, Mike.